Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase. I am currently in Prague in another awesome Airbnb. I think I need to have another static page on my website to list all of the Airbnbs I've stayed at around the world. But I mean, a lot of these Airbnbs, they don't really come around but people keep asking me where I stay, and it's almost easier to just have a web page. So on this episode, I am joined by the one and only Sawcruhteez. It's been probably about a good 2 weeks since you've been on the show. I started traveling. It's so hard to keep all this up. How you been, man?
I've been doing good. I really appreciate you having me on. It has been a little while, so it'll be great to dig into some charts. It sounds like you've had a good time there on your travels. I've been following along, seeing some neat pictures, and was chatting with Daisy. And it sounds like you two are having a great time there in Prague. So that's great that you're able to stay up late and do a show with me. I appreciate it. I am wearing another St. Louis Cardinals hoodie. So far, the Cardinals are undefeated in the playoffs when I wear a Cardinals hoodie and do a stream. So that's pretty something I'm going to have to keep up for sure. They just started, and I'll have one eye on the game as we're going. I tend to get pretty emotional watching these games. So if that happens, I may have to shut it off. But thanks again for having me on, and I'm looking forward to getting into some charts.
Yeah, no, I actually don't have a horse in these playoffs at all. I'm not really rooting for anyone. It's so funny, man. So baseball is the sport. Okay, so volleyball is the sport that I played the most in my life. That was my number one sport I was best at. But baseball is probably the sport I played second most. I mean, I played a lot of basketball when I was a kid too, but I think you're still on softball teams, right?
Yep, I still play softball every year and grew up playing a lot of baseball, traveling all over the country playing. And then golf would be probably the main sport that I played, that and baseball. And had no idea you were a volleyball
Wait,
player.
all over the country, did you make it like single A or something?
Nope. Growing up, we played travel teams. We made it to the World Series one year and actually finished second. And would go, from California to basically New York, traveling around playing. A number of players I think there were 5 players on my team that played in college. One that was drafted to the pros straight out of high school, and I got into golf myself. I went and played golf in college and gave up baseball to focus on that.
Oh, that's pretty cool. Yeah, no, because I was playing softball for a while, probably till I was like 30 or something. Well, I played a little bit of baseball, but I tried out in college for the baseball team. I tried out in college for the volleyball team. I kind of made the volleyball team, but well, once you get to college, competition gets much better. I wasn't tall enough to be a spiker, and in high school, I wasn't training to be a setter, so I kind of got stuck in the middle of nowhere. And so I was playing on club volleyball teams all the way until I got into Bitcoin, and so I stopped playing softball a little bit earlier than that. But yeah, it's a lot of fun. We gotta one of these days, man. We gotta get like a Bitcoin versus shitcoin softball game going.
Oh, that would be excellent.
All right, let's go into charts. Hey, before I go there, hey, so I am joined by Sawcruhteez. You can check him out on Twitter as Sawcruhteez. The links are also in the video description. The YouTube channel, are you still doing daily videos, man? Yeah, looks like
Yep,
it. One
sure
day, 2 day,
enough.
3 day, 4 day. Cool. Keep it up, man. It's not an easy task. And hey guys, so the article for Cointelegraph finally came out. This was an interview that I did with Cointelegraph. Go ahead and check that out. I'm sure I talk shit about Ripple here as well. Dude, so I send off a tweet saying something about Ripple. It has 450 replies, and 400 of them are Ripple, like Ripple supporters, which is ridiculous because I travel the world and I speak at 40 conferences a year, and not once had I met a member of the Ripple troll army. But when I send a tweet about Ripple, like 1,000 of them show up on Twitter. It's really fascinating.
It really is. I'm blown away by the loyal, diehard following that they've been able to garner, much more than a
No,
lot
they
of.
all get paid. No, they all get paid. They're all shill accounts. They're all sock puppets.
That
They
makes
all get
sense.
paid. Here's the tweet, man. 462 comments, and I'm if I had to guess, I'd say 460 of the 462 are Ripple supporters. I'm trying to block all of them, but it's almost like no use because they all delete their accounts and they just get recreated the next day as new chill accounts.
For some reason, I just thought that that was a more organic following, but now that you mention it, of course, that's almost certainly like 90% or more just paid shillers. So that is interesting to see all that flood of
Yeah, no. It's completely paid shillers, right? Like if you click on this tweet with 400 comments, um, so these are actual real people. But here we go. Like it's yeah, I blocked a lot of them. Like anyone with XRP in their actual username, like these are all shill accounts. Look at this. Twitter handle Eli7271 and then a bunch of numbers, right? And you click on these people and they have like 3 followers. Well, this one actually has 500. Wow, maybe this one's been around for a while. But anyway, it's just out of control, but it doesn't matter. Okay, let's move on. Tonebase.com, my only upcoming workshop is Bucharest, and then there may not be one for like 6 months because they're just not, like there's no demand for them these days. Bali is in demand, and dude, we're gonna have a good crowd, man. We're gonna have a good crowd. I don't want to say how many people are going, but it's gonna be a good crowd. We're gonna have an awesome time over in Bali. All right, let's get to the charts.
Yeah, I'm really getting excited for that trip myself.
Yeah, yeah, it's gonna be really, really good. My monthly chart is using Heikinashi, and before we get into the chart, I was just telling Sawcruhteez before we went live. All of a sudden, in the last 24 hours, everybody and their mother on Twitter became a line break candlestick expert. So, something that nobody freaking knew even existed, probably as far back as like Monday, and now everyone is an expert. And when you tell people you have no clue what the hell this thing is, they think you're an idiot. Like it's amazing. I have never heard of this thing. I have no idea how this candle is comprised. To be honest, I don't even know how the Heikinashi candle is comprised because these things didn't even exist when I was learning trading. And the monthly chart doesn't seem to be very useful. So I have, well, look, if they work for you, great, trade them. It doesn't mean that other people are supposed to know what it is. I continue to keep this on Heikinashi, mostly because it was very good with sequential. The sequential called the top using Heikinashi, sequential called the low using Heikinashi. And right now it's on a price flip on a monthly scale, and that is not good. Now the month has just started, so we don't know how this candle is going to end. But right now, it's not looking good. The monthly chart isn't too interesting. I did a video this morning, so I'm not going to say much about my charts. Here are the normal candlesticks with the weekly chart. And just to show Sawcruhteez, everyone basically, like I said, became a line break chart expert. I have no clue what this is, but I'm looking at it and I'm like, hey, you got a 9 at the high here and you got a 9 last week. That is very, very interesting. You also have a 9 at the all-time high in the last bull market, which I also find interesting, though sequential has never called the low on this chart. And there was another 9 here at like $12 for a pullback. I'm using Bitstamp charts. I really, you know what? I want to try something here. This is a monthly chart, but I'm using BLX. I'm going to switch this to the weekly chart, and I'm going to put these line breaks on. I just want to see if there was a 9 here, and there wasn't. There was a 6. I was just curious. Anyway, we're going to go back to Heikinashi. Is that Heikinashi? Yeah, we're going back to Heikinashi, and we're going back to monthly, and we're going to double click on that, and that did not work at all. What the hell happened there?
It is interesting that trend line you have drawn on the monthly, seeing that we could potentially be breaking that down. That might have been a important area. I hadn't seen that before.
I'm gonna adjust this trend line because this trend line was actually drawn on regular candles, not on Heikinashi candles. And if I look at Heikinashi candles, it feels like it should be lowered a smidge.
And I do prefer the Henkinashi candles for trend lines. I have noticed that it makes it a little bit easier, kind of like that red trend line you have drawn there. It's often a little bit easier to identify trend lines with these candle types. So I do like adjusting now that you have these on.
Yeah, so this is a better trend line for Heikinashi. I did it again. Jeez. I am using log charts, guys, otherwise it's not readable. So now when I adjust this trend line to be for Heikinashi charts, I'm within my own rules here with this trend line. It has gone a lot lower, and so it looks like we have not broken it yet. Interesting.
That is interesting.
I also may want to adjust the other trend line, though the other trend line looks, ooh, looks like the other trend line needs to be adjusted a smidge too. No, I don't want to do that. I want to drop the magnet.
And I wonder how Henkinashi candles are affected, if at all, when using log scale. That's something I never use log scale, so I hadn't really thought how that may affect the Henkinashi candles.
Yeah, but it's Bitcoin. You have to use log scale. Unless you're doing hyperwave. By the way, Leah pointed out that on Tyler's original hyperwave view, we are back at phase 2. Is that something that you see?
Yep, I would agree with that. That is where my phase 2 is coming in, is right about where the price is testing.
All right, we'll talk about that when you pull up your charts if you want. Okay, so looking at my weekly chart, I don't like this candle at all. It's a little bit of a bullish candle. It's a borderline reversal candle. We still have 2 days to go this week. I can't believe it's already Friday. And this candle is going to close below the moving average, which is bearish to me. The short-term moving average is falling. We're below a Fibonacci line. You know, the parabolic stars are about to start going down really quickly. And while this could potentially be a reversal candle, I would need us to be trading above the high of that candle to even consider anything bullish. Sequential is fully bearish at a red 6. I am leaning bearish here on this candle. And let me just pull up my daily chart real quick, and then we'll go over to your charts, man.
Cool.
Here's my daily. I do not like this daily candle at all. The day is going to close in a few hours. If tomorrow there is a red 2 going below a red 1 going below $8,050, I become a huge bear in going into next week. Tomorrow is also my October 5th day. I'm not going to talk about it anymore. I've already talked about it a lot. I'm expecting something to happen tomorrow. I don't know what it is. Though I am expecting the price either to go up or to go down. Can the price just stay flat? It can. I am expecting tomorrow to be some kind of a news event or a big price move without a news event. I am looking for something tomorrow. I'm not going to cherry pick something insane. It has to literally be something noticeable. I'm not going to be sitting there combing through every single article and then clinging to, oh my God, this was it. This was the important thing. I mean, I would either recognize it as significant or I won't. I also don't consider these days to be written in stone. If something happens a day or two later, that would be close enough for me to October 5th being a critical day, but it's not that critical. It's a minor point. The next one is going to be a little more important. The one after that will be also a minor point, but the one after that is going to be major. But that's not coming for like 6 more years. And 12-hour chart, not going to bother. The 4-hour chart is bothering me a little bit. The moment this chart goes under 8,000, I think the floodgates will open, and I have not ruled out, significant lows here. Going below 3,000 is unlikely, but I am gonna ask Sawcruhteez what he thinks on that. All right, I'm gonna leave it here with Bitcoin, and I'm gonna stop my screen share and head over to you.
Sounds good. I will go ahead and pull up a chart. Let's see here. That guy. All right. So let's go ahead and take a look. And the first thing that I would like to talk about is recently released a new indicator with the help of somebody in your chat group. Casey Bowman helped me put together this.
Oh, cool.
Has been called the Peterbolic SAR, and it is based off of Peter Brandt's 3-day rule, which is what he uses to trail stop losses. And in a conversation with somebody, I was just talking about the only thing that I would consider using other than the Lucid SAR as a trailing stop loss is Peter Brandt's 3-day rule. And it was something that I really started looking into a lot and kind of realizing that, man, this thing is so powerful that we could potentially even use that as a full stop and reversal system. And after backtesting, I came to the conclusion that, yeah, it does seem like a very interesting stop and reversal system. So that's why we went ahead and called it the Peterbolic SAR instead of the 3-day rule. So you guys want to find that, just, search Peter in the search there, and then this will come up as the indicator. And there's also somebody else put together a strategy tester so that you can back test on different time frames and using different candle types. What I'm trying to figure out right now is I'm really intrigued by it, and I'm wanting to start implementing it in my trading. But I'm wanting to figure out if it works better with Henkinashi candles or normal candles, and also if it is something that I will be looking to use as a full stop and reversal system, or if it's one that I will maybe use as a partial stop and reversal system based on the based on the overlying trend. So we can just kind of go back through some signals really quickly, see how well this has been working. So how it works is there's a setup and then there is a trigger. So the setup occurs when you close a candle above the high of the candle that made the extreme point of the prior move. And that can be a little bit difficult to understand, but visualizing makes it pretty easy, where we just find on the downside what is the lowest low of the down move, and that I call the extreme point. And then you look for the highest high of that candle, and then once you close above it, you get a setup, and that is what the yellow is. And then the green is the trigger. If you violate the high of this setup candle, if it's a bullish setup, the triangle will be below. And if you violate the high of that, you don't need to close, just violate it very briefly, intra-candle works, then you get the trigger. So we had a buy setup here and a trigger that immediately followed. It doesn't have to immediately follow. And then just notice on the weekly how well this would have worked, trigger down in here. And then if you're really looking to position trade or really even, invest, this is a really powerful way to, signal when it's time to get out and potentially if there's a major reversal. So here we get a setup, but we never break that low. So there's no trigger. And then if you get a new extreme point, so when we make a new high, this setup is now invalidated, and we get a new high here. So a close below this low happens right here. We get a setup, never break that low. So you hold on. Same thing here, all the way up until right here at about 12,845 is where that got violated. And what's interesting is where how often this trigger will line up with also a parabolic SAR break, specifically a lucid SAR. But then what we notice is that it may be doing a little bit better of avoiding some chop and some whipsaw. For example, here we had a lucid SAR break and, kind of got bearish for a minute and then turned back bullish here again. And we did get setups there, but we never got triggers. So this is where I'm really, really liking this tool, as it will be getting us out often very close to where the SAR does. And then when the SAR gets a little choppy, it may help us to avoid that action by just holding on. And you can use this to set hard stop losses. If you get this trigger, you can set a hard stop there. So if you are interested in learning more, I put together a pretty good description. If you head over to Casey Bowman's profile, so if you pull this up and then you head over to Casey Bowman's profile, there is a description put together for that. So I just wanted to kind of go back through looking at some good signals. For sure, when it gets choppy, you're going to have some bad signals, but the risk reward is what is so attractive to me on this. Just pay attention to the small, when you go through yourself, we're not going to go through it all today, but if anybody's interested, just pay attention when you do get chopped in and out, how small the losses are in relation to the wins when you get some nice signals. So for example, here we had a little bit of chop, but we get a really good signal right here that would be right around 36 that had stuck in again. Notice how the parabolic SAR broke on that same exact candle as that trigger came in. So really liking playing around with this and excited about getting it into my making it a part of my strategy, if not fully replacing the lucid SAR, potentially looking at how to combine them is something that I'm going to be looking at a lot. So I wanted to go through that because we did have recently a buy trigger on the daily, which is something that is quite significant. And the reason we got it again is here's the lowest low of this move. We close above the high right here. And then we get the buy trigger when that is taken out. And then if you're using this as a stop and reversal system, you know, potentially going short here and then waiting for this to cover the short and then going long. For me, I'm wondering if potentially just use that to cover short. If the trend's bearish, I'm not that interested in, you know, betting against the trend, but we'll continue to mess around with that. And that we do see the Heikin-Ashi candles did not get that. They haven't even gotten the setup yet. We've got the lowest low of the move here, and we failed to close above that high point on the Heikin-Ashi candles. So this is a setup where we'll be paying close attention to see which one is you know, more accurate, if that was a good buy signal from traditional candles or if that was better used here on the HA candles. So kind of went through a lot there in one breath. Did that mostly make sense to you? Any questions that may have come to your mind?
It did, but the last bullish trade would have lost you money, right? Because you would be entering at the break of prior candle's high.
Absolutely.
Right?
So yeah,
and then you're exiting at the break of that yellow candle's low about a few exactly.
Yep, absolutely right. So that's where we can just kind of get an idea of the kind of risk reward. Like this would definitely be a bad signal, and we can go through a number of those. And you know, 5% loss on your exposure there, and then if you entered here, it would have been, you know, close to the bottom.
And you're still short.
And then you'd still be short down here for, you know, pretty significant difference there in the risk versus reward. And again, there were definitely some bad signals in this choppy range, but also were a couple decent signals that would have really, that's the other thing that I'm working on, is I really like the idea of putting this together with the TD sequential and using it as an area to profit take. When you're deep into profit, notice how this was a good signal. I mean, you got in on a 2 above a 1 basically, and price moved very well in your favor. But if you waited for this trigger to get you out, you're basically out at potentially, yeah, even a worse price than you got in. So this is where I'm really interested in using this in combination with the TD, not only to kind of confirm entries, but also to use it as a partial profit take. And then when we get, you know, stuck in ranges, we definitely do expect some bad signals, selling the bottom right here, but getting out again, probably similar risk, like right there. That would definitely be a significant loser there for sure. And again, it's something that I still like. Basically, you know, this is a 3 below a 2. There's a number of reasons why I may want to take this, specifically after a big move. And let's just compare how I'm generally trading, and that would be using the Lucid SAR as my stop loss. So here we do see that the Peter Bollock did, you know, have a pretty darn bad trade, but it was even better than this Lucid SAR ended up being. So that's something that I am continuing to track. It seems like the losses can often be minimized by using this system, and the wins aren't decreased at all, as we kind of saw in some of those good signals. So this is something that has just been released that I am still playing around with. It can be just used as a trailing stop loss, like Peter Brandt. That's how he developed it. For example, we have a descending triangle that if he is selling that breakdown, if the price doesn't get to his target, you know, he's wanting a way to make sure that he's getting out, and that's why this system was developed. So there's a lot of ways that it can be used, and I'm still very, very interested in using it as a stop loss, but fiddling around with some back testing to see if it can potentially be used as even more than that. So we could go ahead and zoom into the 4 hour, because I do think I kind of agree with you.
Before you go to the 4 hour, wait, can you go zoom back out to the weekly?
Yep, you got it.
By the way, I'm seeing this for the first time myself. I've never seen this indicator before. And this is the weekly, right?
This is the weekly, yep.
Okay.
HA candles.
Can you zoom in on that? Like the recent time area? Yep, hold on. I think it was the weekly, and then just go backwards. Like, yep, you keep going, keep going, keep going. Like older time periods.
What is there a time period specifically you're wanting to see?
No. There was one that I wanted to ask on. But,
oh, okay. Just scroll through to see if we come across.
Maybe it wasn't weekly, it was daily, but anyway, I guess it doesn't matter now. No, there was one yellow that it didn't make sense to me, but that's okay.
All right. Yeah, definitely. Let me know if there's anything that doesn't quite look right, and we will go ahead and zoom on into the 4 hour. So here we've got definitely, you know, an area of chop, and what I've been paying very close attention to is that 50 moving average, as well as a potential bear channel that has been developing. So I will make that a solid line if I can figure out where my drawing tools went. Am I hiding it? Yep, okay. Let's get that out of there. And okay, so paying definitely very close attention to this channel that has been developing. Figure out how exactly I want to draw it. I think that is going to be the best fit there. And I'll try to just clean this up a little bit, because all I'm wanting to look at right now is this action that has occurred back in here. This was starting to look pretty darn ready for a move to the upside, in my opinion, when we broke through this resistance here and then failed to come back and retest the bottom of the range, and instead create a higher low and kind of have that nice little kind of cupping action. Was looking not textbook, but very much like the same idea of an inverse head and shoulders, where we have kind of a shoulder here and a head here, maybe another head here. And then this guy right here was really making me think that we could be ready for a significant bounce. So I was watching for a close above something like this, and we never got it. And instead, we've gotten a pretty decent reaction to the other side. So I have been kind of keeping my eye on this. On my last stream, I mentioned how the top of this looks like a pretty darn attractive selling opportunity due to it lining up like 3 areas of resistance that I can see: trend line, horizontal, and we can even take this over. It's a pretty significant area of horizontal. And then if we do get through those, maybe it will be just a bit of a trap that gets shot down by this 50 EMA is really what I am expecting right now. So I will be paying very close attention to that, and we can even zoom in quite a bit because there's another sort of channel that maybe is breaking down right now that's inside of this. Now I do want this one to be dotted. So it looks like resistance may have held on that move, and being that we are now below the bottom of this action, this whole move we have been, trading in a pretty tight channel, and now we see that it has broken it down, and it looks like to me that resistance held, and we should be on our way back down to revisit the bottom of this territory, which would be around 8,000. And my target, I'm thinking at least we're going to revisit 77. If we do reject up in here, then a return to this area makes a whole lot of sense to me. And a date that I was looking at, I'm fascinated by your time analysis, and there is kind of a method that I've been using to help me get a feel for when this range may break, and that is just based on the idea that markets trend 30% of the time and they range 70% of the time. That's something that I really believe in, and therefore what I'll do is see, okay, when did this trend start? I would say it started right about here and went to about here, which is 3 days. Let me see, I need to get this zoomed out a little bit. I think I want to use the daily. Okay, so we were, I think this is how I was viewing it. Yeah, right here, because we created a new low here. So I would say that this is the trend that has occurred for about 7 days. And if we just multiply that by 3, we can give ourselves an expected range of 21 days that is 3 times as long as that trend, which hopefully makes sense. So, and then we would extend that from September 30th. So that would give us about on October 20th would be an area where I would think that we could range until then. And if we do, it would be highly likely to go ahead and make another move. And I'd done the same analysis on kind of this range here. And I think that basically that's why I don't think that a bottom is in, is because we ranged here for, let's see, I would consider basically all of this the range. 89 days. So therefore, I would expect the following move to take to last about 30% as long as that. So 30% times 89 gives us 26 days. So 26 days from September 24th would be about October 20th. So that's where both of these may suggest that we are, that October 20th is a pretty important date, that if we do break down this range before then, I would expect the following move to last until October 20th. And if we do just stay stuck in here up until that date, then maybe I could see that a bottom is actually in. As far as it stands right now, I'm expecting a trend to last 30% as long as this guy did here. So that is pretty much what I'm seeing right now, and we'll be continuing to pay close attention to that channel, as well as these horizontals that we have kind of drawn in a little sloppily. We can move that there. And I like generally using 3 horizontals when we're in a range for the absolute lows, and then also kind of a median and then the highs. So that's pretty much what is all coming to mind right now. Anything else to add on this chart?
No, I mean, other than I see consolidation between 8,000 and 8,500, incredibly bearish. And I mean, I'm pretty confident that once it moves, it's going to move down. It doesn't have to, but I am confident that it's going to move down. due to this consolidation.
I'm feeling the same way myself.
Unless this consolidation lasts into the halving, and then I would consider this consolidation to be bullish. But if the move comes sometime this year, I am pretty confident it will be to the downside first.
That's how I'm feeling myself. So I definitely agree with you there. One other thing I wanted to point out is that we switched back to normal candles, and we have, as far as I know, never had 3 straight red monthly candles while still being in a bull market. So this is actually pretty darn significant to me, that anytime we've had 3 consecutive bear candles, it's been a bear market. And anytime we've been in a bull run, we've gotten a couple times we've had 2 red monthly candles, and both times they provided tremendous buying opportunities. So when we broke down not only these reversal candles, but also closed a 3rd red monthly candle in a row, really makes me think that this is much different than we've ever seen before, because we've never entered a bear market before creating a new all-time high in a bull market, that potentially this was just some major counter trend bounce, and this has been a bear market the whole time, depending on how you determine trend. This is something that I am, this is one of the most bearish things to me, is these 3 red monthly candles, all with nasty, nasty wicks on top.
Well, that's how I always saw it. Like I never trusted this run up. Everybody knows that. This run up from 3,000 to 14,000, I questioned it the whole way through. I never felt that we were in a bull market. And we're seeing other similar firsts, like with the interview that I had with Willie Woo, who said, well, Bitcoin has never sat below the 200-day moving average while being in a bull market. And now Bitcoin has been under the 200-day moving average, simple moving average, for quite a while. I mean, you have the exponential, and now we're sitting here for going on 2 weeks below the 200-day moving average. And if we pull back any further, I mean, what does that mean? What if we spend a month and a half below the 200-period moving average, whether it's exponential or simple? And Bitcoin has never been below it at all while being in a bull market. Like, was there ever a bull market? And if there wasn't a bull market, and I've explained this many, many times before, anytime Bitcoin goes up in an exponential way, it corrects at least 80%, not 80% of the range, 80% from the high. So I keep telling people that by Bitcoin going up exponential to 14,000, you have opened up a reasonable possibility that Bitcoin will fall 80% from the top. And again, I clarify, 80% down from the top, not 80% of the range between the low being 3,000 and the high being 14. And of course, I'm rounding. Okay. So Ugly Old Goat and I spent like 2 hours explaining why that is. And that would be my ultimate low. Like that would be the low where I probably try to sell everything I can and go all in. If I see that number, if I see you have it at 2,600 or something.
Yep.
If I see that number, I mean, I'll sell my car, I'll sell my apartment, I'll sell whatever I can and go into Bitcoin. That would be my absolute ultimate low at this point.
That's fascinating, because I'm really expecting this whole time. I've been expecting this correction to find strong support around 61 to 63, which is where I think it's a really attractive opportunity to bet big. Basically, it's very well-defined stop loss where the risk limit is, and there's a lot of previous support in that area. So I'm very interested in betting real big if we get down here, and then using a fairly tight stop loss. If we do break down 6, I'm going to be worried. I mean, I'm not going to be feeling good. And then if we ended up breaking down 3, I'd be definitely I'd have a hard time buying after breaking down this low, but after what you outlined, I do agree that this was a parabolic move, and parabolic moves are so prone to get an 80% correction in Bitcoin and in a lot of other markets that if we did take out this low, it would cause a lot of panic, and potentially it would be the perfect buying opportunity. So I'm definitely glad that you brought that up, and I will certainly be keeping that in the back of my mind.
Yeah, and look, Bitcoin can rebound at any other spot, and like if it rebounds at any other spot, unless sequential, gives me a clean low, I would consider, going big on Bitcoin then. But as far as straight up price is concerned, it's that. Now, like you said, Sawcruhteez, this Bitcoin falling back towards 3,000 would concern you a lot. For me, it would not concern me at all if it happens before the halving. If it happens after the halving,
Yes.
and more specifically, not even before the halving, like if that 2,600 comes, I want it to come this year. Like I don't even want it close to the halving. Like it needs to come before end of February. Like I want a clean 2 months before the halving for that number. Now, if we are breaking down 3,000 in say July of next year, that becomes very, very concerning.
That's a really, really good point that you make. Absolutely. If we get there, with a significant amount of time before the halving, that could actually be like the most ideal thing that could happen. Because imagine what would be happening to alts. If we fell down there in a hard and quick fashion, alts are already, they didn't get the big run up. So they are just ready to completely shit the bed as far as I'm concerned. And if Bitcoin was to just, really dump down to 26, there's no way in my mind Ethereum would be above $10. I mean, there's just
it wouldn't. It would be sub 2. Like that's the scenario. That's the scenario they die. Now, again, I have to explain something to people in the chat because clearly they don't watch this channel. I'm a hodler. People are like, I can't believe you're only gonna buy it if it goes down, because I'm not gonna risk it. Well, like I'm not gonna sell my apartment right now because I'd have nowhere to live, right? Not that I live in my apartment much, but like it doesn't make sense for me to do that. But when everyone else panics thinking Bitcoin is dead, that's when I'm interested. And I would have, and remember that 2,600 that we're looking at right now, that was the 15 to $1,800 area. If we did the same exact video, a year ago, when we were breaking down 6K, I will sell everything I can and go all in on Bitcoin was sub 2,000. All that's changed now is that it's now sub 3,000, because it is completely stupid to sell everything you own and buy Bitcoin in an area where it has a potential of losing 50% plus.
Absolutely. Couldn't agree more that there are some times to really bet big on Bitcoin. For somebody like myself who is young, I have a high risk tolerance, and the upside is so big. If we do get to some of these prices, then it becomes so attractive to like almost, be irresponsible with how much a position is taken, because the upside is just too worth it for somebody in my position. I wouldn't recommend anybody else do it, because then you get all these emotions involved when you bet too big, and it's something that I would be definitely interested in making a much larger than normal bet as price goes down. But that doesn't mean that I am going to be waiting for that and I'm going to totally miss out and own no Bitcoin if price doesn't get there. And that's definitely something that a lot of people don't understand, that maybe I make a big bet at 6,000 with a pretty tight stop loss. And then if we do take out that stop, I would definitely still be ready to go ahead and make another bigger bet lower. But if price didn't get there and I don't have an ideal setup, then, I'm going to just probably be betting normal on my normal signals that come through. So while chatting there, I did remember one other thing, that this is starting to look quite a bit like a bear flag. I'll go ahead and take off that EMA. If we kind of continue this consolidation, like Tone said, it would be bearish. And I completely agree. And the main reason is these moving averages. I mean, if we get a death cross with the 50 and 200-day moving averages with the price anywhere close to it, specifically if it's developing a bearish pattern, now that's like an ideal short setup for me. So that is something that I will be paying very close attention to, and really agree with Tone that if we do continue this sideways action, that just means we have an incoming death cross with these EMAs, and that would be potentially a really, really good selling setup as far as I'm concerned. And then I do want to just measure that move really quickly. The volume does confirm this pattern pretty well in my mind. We have a big volume spike on the sell-off, and then as prices kind of consolidated and bounced up a little bit, we see that it's on dwindling volume. So if this does confirm, so somewhere in here or so, then the target is going to be right in line with this horizontal support.
Right now, anywhere below 7,000, I think is a very good trade buying opportunity. See, there is a difference between going big on a trade and going big on a hodl long-term, I will hold this for 10-year position. So
Great.
if that happens, I think that is a great buying opportunity, but as a trade, not as a, like, again, this is, none of this is advice. I'm just telling you guys what I am going to do. I am going to consider leveraging everything I have to go in at 2,600. Now, there's a high probability Bitcoin is not going to get there, which I am perfectly okay with. I have zero problem with that. I'm always going to be a long-term Bitcoin bull. Now, I want to address one more comment in the live chat that says, honestly, I hope that this breaks up and goes straight to 14,000, just so Saw and Tone, can have a joint, even though I don't smoke. You live in Colorado, so I'm not going to ask. Even Saw and Tone can have a joint therapy session where they analyze where they went wrong with their analysis. That is an impossibility. There is no such thing as us being wrong in this. This is a probabilistic expectation of the price going down. This doesn't have to happen, but I will tell you this: if Bitcoin goes above 14,000, I am finally back to being a bull. And the reason why is because the 14,000 is a very clear lower high. And if we can break the clear lower high, that's when I become a bull. Now, prior to this 14,000 being established, I would have needed to break the all-time high to be a bull, because the market did not fall to my anticipated low. And I am okay with that as well. Now, in the last bear market, it was a little bit different. If you want to scroll back a little bit, if you want to move this over a little bit. Back then, in the bear market, you see how we fell to 150 back in January. Nope, further. Yep, there. We fell to 150. My expectation was that we would fall to 110. So obviously, I was incredibly wrong by predicting 110 when Bitcoin was 700, and we only fell to 150. So I was still looking for my secondary low. However, because Bitcoin spent so much time at the low, I became a bull in a reasonable time. I basically became a bull at like 400 bucks. And then I rode that bull wave all the way to 7,500. And that's when I started to get concerned. So, and this is what I mean. If we can consolidate in the $8,000 range through into the halving, that's enough for me to now be a bull. Other than that, I need to break 14,000, or we need to fall to new lows. 2,600 will, make me go all in pretty much.
I like it. And this chart actually reminded me of the one reason why I have held on to some suspicion about this run up is that we never got capitulation, as far as I'm concerned. In this last bear market, it would have to be the first bear market that ever ended without capitulation. And a lot of people will like to say we fell 90%. So how did we not capitulate? Well, we didn't capitulate because we didn't get something like this enormous selling volume that just completely blows out everybody, just panic selling the bottom with a huge spike in selling volume. This is my main indicator of a bottom of a bear market. And we did not get that in Bitcoin. Instead, we just had this here. This is definitely a spike in selling volume, but it's not that massive spike. It doesn't overwhelm everything over here to the left. I'll try to make that a little bit darker. It is a spike, but it wasn't capitulation as far as I'm concerned. There were way too many people bullish at the bottom and not nearly enough people panic selling when we got down in here to rival this selling volume or really blow it out and then get some sort of, capitulation wick. This, to me, has been the number one reason why I was expecting 1K above and beyond the hyperwave target. I was most confident that we were going to move down, continue moving down, because we just didn't capitulate. And therefore, I have always had that in the back of my mind. Is like, is this the first time? Is Bitcoin so bullish and people are getting such thick skin to these massive moves that it's able to find a major long-term bottom without what I would consider capitulation? And that is a little bit subjective. So if other people out there do think we did capitulate, fine, that's more power to you. But what I look for is a high volume with a big wick on bottom. And when I say high volume, I mean the biggest volume spike that we can really see throughout that entire market is what I was waiting for. And I don't think that it happened. And that is one thing that has been kind of concerning me and in the back of my mind throughout this run up.
All right, so you ready for some more bearish gloom and doom news?
Yep.
All right. So, because I'm already hated by everyone for being a bear. So what the hell is the difference? So somebody said something interesting. I don't even know who to give credit to. But they said it in a way that, I disagree with them completely, but it made me think. So somebody said that, of course it was a shitcoiner, that the only way Bitcoin will go to new all-time highs is if there is going to be an altcoin season. Basically, altcoins need to go to new highs in order for Bitcoin to go to new highs. So basically, they're anticipating the wave of altcoins. And I thought about that. And if we look back at 2017, just like zoom out, right? If you look back at that big 2017 rally, the person actually had a point. And that person's point was that the main reason why Bitcoin went so high is because of altcoins, is because of all of this speculation into altcoins. And it was the altcoin speculation that benefited Bitcoin greatly. And I had to think about that statement for a minute. And in a way, it makes sense. So, because those that have been watching this channel for years know that I called the yearly high at 7,500. Now, I became a technical bull once we broke 7,500 a week later, but not a fundamental one. Fundamentally, I was concerned because now we're going, I didn't know about hyperwave back then, but that was phase 4. That was the beginning of phase 4 of hyperwave, which, as Tyler explains, ends very, very badly. So if we take that person's logic as reasonable, and I believe it is reasonable, I think it's reasonable to consider the fact that Bitcoin went so far up because of altcoins. Now you're saying, well, that scenario has to repeat. But what if altcoins don't come back? What if they never come back? What if it's like the .coms? So if altcoins don't come back, then it could take another 4 years for another mass speculation and mass adoption from, hey, be careful, you don't want to be sharing too much there on the screen share. Then it could take, 4 more years for another retail entry into the market. And that's an interesting take on the situation. And that basically says if the altcoins, which you and I and anyone else with 2 cents in their brain knows that these altcoins are garbage and should have never existed, that also means that Bitcoin probably should have never gone above $5,000 back in the last bull run. And if Bitcoin never goes above $5,000 in 2017, that means the 80% correction from 5,000 takes us to under 1,000 in 2018. That means the run up to 14K is no longer a run up to 14K. That becomes a run up to maybe 3.5 or 4K, followed by another big correction, right? So if this altcoin bubble continues to deflate, it may take a really long time for Bitcoin to get back to 20K. I mean, we're talking 2024, 2025.
That is interesting perspective that I have I've heard before, and it does make sense from some levels that the fervor and euphoria and everything along those lines is what led to Bitcoin really taking off much more than it should have. But it's not something that I don't think it's right. For me, I would object, and that's where I was trying to find another chart. So here, let me just real quickly throw this on because basically what I've been looking at here is the decreasing growth in each bubble cycle. Every time that Bitcoin has entered a bubble, it has decreased in size. So that 2017 top right there, it is at a really nice spot as far as I'm concerned. It decreased by about half of the last move, which makes sense to me for a number of reasons. And it also got up to the top of, like, it could have even gone higher. Like if I was to draw a straight trend line, it would have had, prices way up here, which would have been just absurd, which actually maybe would have made sense if there were no altcoins. And every time we get a new bubble, adoption spreads. And every time we have a bear market that doesn't take the price to zero, people start to become really, really interested. And if the, adoption kind of spread here, and also that's the first time it was like really on the news and people started understanding what it was. Everybody thought it was going to go to zero, and it didn't. And those people that heard about it here now maybe became buyers in here. And if they weren't confused buyers by not understanding that there is not like a lot of people that were trying to buy in here were trying to find the next Bitcoin because they realized that these ones at $2 maybe could do what Bitcoin did, and buying a Bitcoin for thousands of dollars wasn't as appealing to them as buying some shitcoin that on Coinbase. And that's something that if those alts weren't around, then that money there wouldn't have been any confusion. It would have been easier for people to understand the value proposition, and they wouldn't have been divvying out. Like everybody that I know that bought into Bitcoin in 2017 for the first time also bought Litecoin and also bought Ethereum. Like literally everybody I know, because they went through Coinbase and they just saw those other options, and so they decided, man, I should own some of those myself. So I am of the opinion that potentially we could have gotten a lot higher back in here if all that money was flowing into Bitcoin and there wasn't market confusion about what the next Bitcoin is going to be.
Yeah, no, Sawcruhteez, that is actually a very good point, right? And this is the big dilemma here, trying to make the argument whether without the stupid of buying into altcoins, would Bitcoin have gone significantly lower on its bubble, like 5,000, or would it have gone higher on its bubble to say 50,000?
That is the question. We can only speculate. I think there are good arguments to be made that altcoins drove this sort of appreciation, and what made us get much more overbought than we needed to be, or would have been otherwise. Another reason why I would tend to dispute that is that something like Ethereum lagged Bitcoin. So if we look at when Ethereum really made its big move in the 2017, and we compare that, let's see here, we pull up the daily. So Bitcoin tops right here, and Ethereum then went on to appreciate another, 1,400%, another 100%, up to about $1,400 when Bitcoin had already topped. So if alts were really leading that cycle, I would expect it to be the opposite, where Ethereum tops and then Bitcoin goes ahead and makes another move. To me, this looks like Bitcoin was leading, like, for example, back in.
Oh, you gotta line up the dates here. Hold on, like that. Okay. There's something's wrong here.
The dates aren't lined up perfectly, so let's try to do that. If we get July right there, okay, that should be pretty darn close. So what we see.
No. You want the leftmost date, which is June 2017, to also display.
Okay, that's just based on Zoom.
Yeah.
So
and then you want to do it the other way as well. So you want to shrink that chart. So like you just want the leftmost month and the rightmost month to match.
Okay, I think that's going to be.
I say just put 2017 at the left hand. All the way. Just put 2017 all the way to the left. Just drag this chart to the left.
Okay.
So that 2017 is on the edge.
Okay.
Okay, right there. And now do the same thing with this one. So 2017 is on the edge, and then spread out the Bitcoin chart so that the current price is under the Ethereum's current price. So you just want to like expand the time range, like make it wider.
Okay.
Right, perfect. So that the price ends under the Ethereum price, and then 2017 is right on the edge there. So you gotta shrink the time zone. Now you gotta shrink.
Well, it is right now. Yeah. Okay.
Nope, not in line. Yep, you gotta have 2017 on the left hand side. Yep, right. And then the price has to be under the price, and then you're in line. So you want to shrink put your cursor on the time zone, on the dates, and then just like contract it a little bit.
I'm having a little bit of trouble. I think it'll be easy if I just point out the dates instead of looking at both. It's just a pretty simple idea that I'm wanting to share here. And that is that Ethereum is stuck in this range from June 13th to November 20th. It's stuck in a range, sideways, bullish consolidation pattern. So while that is happening from June to November, what's Bitcoin doing? From June to November, Bitcoin is already taken off. So I remember the same thing with Litecoin, where Bitcoin takes off and these consolidate while Bitcoin is taking off, and then these follow. So it follows here on this leg, and then it also followed on this leg at the top. So I apologize, it's not lined up perfectly, but the idea is there where Bitcoin led that last market. Bitcoin didn't need Ethereum to create a new all-time high here before it did. And sure, there was a lot of massive appreciation that happened. Alts appreciated much more here before this happened, but it isn't, in my mind, what led Bitcoin into this massive overbought parabola that occurred above 5,000 and above 7,000, because Ethereum is still going sideways, and so is Litecoin around $50. So that's my argument why I don't believe that we need alts to create.
Can I give you a counter argument to this one? So
Please.
let's do the specific dates. Can you just I know Bitcoin topped on December 17th. What was the top in Litecoin? Sorry, in Ethereum.
Ethereum was January 12th.
January 12th. So it's about a month later.
Yep.
Okay. So we all agree that in 2000s, it was the tech and the stupid .coms that topped the market.
Mm-hmm.
NASDAQ topped significantly earlier than the S&P did.
Okay.
Okay. So, oh yeah, wait, I'm sorry. That's actually in line with Bitcoin topped first. I believe the NASDAQ also topped first. So that actually does make sense.
Yeah, and I think there are
Sorry, guys,
tons.
a little late. It's past midnight for me, and I'm also coming from a time zone that technically it's past 2 a.m. for me from the time zone I just came from, and I was there for multiple weeks. So I believe the NASDAQ topped first. Somebody might have to fact check me on that. I believe the NASDAQ topped first, so that makes sense. So that was the leader. Well, Bitcoin is always the leader, right? But also keep in mind, people want to buy into these shit coins, and usually you have to go through Bitcoin to buy into the shit coins. You're believing in the hype of the shit coin. You're believing in Ethereum. You're believing in Ripple. God help you. You're believing in Litecoin. So it's not just a simple process of first you have to figure out how to buy Bitcoin. Then you got to go through an exchange, and then you got to figure out how to use that Bitcoin to buy Ethereum. So at the very top of that bubble, it's still possible that the shit coins are driving it, but the only way to get into the shit coins is usually through Bitcoin itself. So you're buying Bitcoin first, but then eventually people stop buying Bitcoin, but they're still trying to buy Ethereum with the Bitcoin that they bought.
That's a really interesting point that I haven't really considered that in terms of if they're buying Bitcoin with USD and then using that to buy a shitcoin, they're not selling the Bitcoin for USD. So that market cap, I'll have to think about how that could impact the price movement of Bitcoin if people are locking their money into it, but not selling it for USD. Instead, they're selling it for an altcoin. That's definitely a very interesting variable that I haven't considered when thinking about that question.
Yeah, and here's another one. And I don't know if you watched that show with myself, Willie Wu, David Poole, when we were in Baku.
Yes, yeah, I certainly did.
And they said something interesting that I never really considered. I never really cared about cash settled Bitcoin futures, like what CME is doing. I never thought that it was a driver of the price. And I never considered BitMax or Deribit or any of these other Bitcoin futures exchanges to be the driver of the price, because no one is converting fiat into Bitcoin. I always felt that it was Kraken and Coinbase and Bitstamp and Gemini, though they have shit volume, as the drivers of the price. But David pointed out something David or Willie, one of them pointed out something very interesting in that because yes, BitMax is futures, and futures settle based on the underlying price of Bitcoin, which is true price discovery. The BitMax futures are not price discovery. However, because you can't actually go into fiat on BitMax or Deribit, you're always staying in Bitcoin. That by moving your Bitcoin into BitMax, you're locking up your Bitcoin as a hodler. And everyone trading on BitMax is basically a hodler, not to mention their insurance fund continues to lock up more and more Bitcoin. And that practice is, with the rising volume in these Bitcoin-only exchanges like Deribit and BitMax, it has been inflating the price of Bitcoin due to the fact that it's Bitcoin being locked up without the ability to exit into dollars. It's staying in Bitcoin. But if there is a big exit out of, let's say, these exchanges, and I'm specifically talking about BitMax because it dominates the volume. If there is an exit to say, shit, you know what? I want to pull my Bitcoin out of BitMax and I actually want to go into a stable coin, and by stable coin, ideally, it's just the US dollar, not a tether kind of stable coin. That could create enormous selling pressure that people don't realize even exists.
That's fascinating. Yeah, definitely something that I hadn't thought about myself. I must not have been, sometimes only catch, miss some things that are said if I'm doing something else when I'm watching a show. So yeah, that is a very interesting point that I will have to give that some more thought as well. Definitely give me a couple things to think about.
Yeah, and like all of this sounds like I'm making this dire bearish case that Bitcoin's going to zero. Now, this is the balance side of the market, because on the flip side, Bitcoin is fundamentally sound, but being fundamentally sound doesn't mean that the price is rational. And what I've seen in late 2017 and what I've seen here in 2019 has been, to me, irrationality.
Yeah. I mean, I can't argue with that. I'm of the opinion that no matter how sound the fundamentals are, the markets are still basically always going to be irrational, whether it be Bitcoin or anything else. I am always of the opinion that something's either overpriced or underpriced due to the irrationality of market participants.
All right, we probably should get going, but do you want to? You have any comments on gold and stocks, gold and S&P?
There's definitely been some action happening there. I have been expecting a pullback in gold, and then as the pullback in the stock market happened, gold has started to show some significant life again. So I'm kind of ready to got my finger on the trigger to re-enter there. I was fortunate enough to exit somewhere close to that local high, and if we do take it out, I will be ready to re-enter again. I think that there's tremendous upside in gold, and that is one of the assets I am most excited about over the next couple of years. I'm going to be paying very, very close attention to it.
All right, I'm gonna just pull up the charts real quick, only because I'm curious, because I have no idea how either one of those two did right now.
There was some scary action in the stock market. I do not like what we saw last week.
I mean, I really liked what I saw going into Thursday, but I don't know what happened on Friday. Holy shit.
That's where my stops were.
So this actually proves that I did not look at it, right? Because when I opened up this chart, you saw the red candle there and it just updated. So the red candle shows you the last time I opened this chart. I had no idea it rallied this much. I was pointing out, and the notification service was pointing out, all of these stocks that were hitting nines over the last 2 to 3 days. And I was a strong, I'm not going to say I was recommending it, but I was very, very bullish on Lyft and Uber, even though I'm very disappointed in how Lyft did, considering it was coming off a 9 and we just had a monster day in the stock market today and Lyft didn't move. That's disappointing. Let's see Uber on this one. And Uber didn't do anything either. So that's kind of strange. I mean, it's still a nice trade off the 9, and the CMF should go positive next week. So that is very impressive. When was the last time we saw a shadow on the bottom end of the candle that big? And that is very impressive. I am actually pretty damn bullish right now. I became bullish yesterday. Actually, well, today just ended, so I became bullish yesterday when this thing was rebounding to the upside, and I'm even more bullish today. We clearly made a higher low, and we've established a higher low, and now we just need to, break out to new all-time highs. The next time the S&P 500 breaks 3,000, I'm expecting it to take off like a monster. Basically, the S&P has not done much. The S&P has not done anything in a year, right? Because if you look at the last year, we made this high here, and that's exactly where we are today, more or less. And we spent the majority of that time way below that red line if you do like, an average. So if we break 3,000, in fact, if I take this red line and I even stick it here, I can make the argument that Bitcoin, I can make the argument that S&P has not done anything in 2 years. In 2 years, the S&P has returned zero, and spending the majority of its time below that red line. That means the S&P has 2 years to catch up on. And I'm expecting this thing to take off to 4,000 fairly quickly once we break above 3,000, sometime coinciding with like the Trump election and stuff.
Yeah, I really agree with that green line that you have drawn. I didn't realize that we were able to close above that today. I was not expecting that to happen necessarily. I thought that.
Oh, neither was I. I thought this would be like a little bit of a pullback on a Friday and then take off on Monday, but we clearly took off on Friday. And once again, everybody was panicking. I wasn't. I did say, hey, this red 2 below this red 1 is troublesome. You don't want to be in the market. And my concern for the S&P lasted a total of a day and a half.
Yep, that is right where I got out of the market. I didn't want us to fall below that green line after we broke through it. And on that pullback, I really wanted us to turn that into support. And after we did break that down, I did start getting worried myself because it looks to me like a lower high in the market. I agree with you that if we break through 3, we can really explode to the upside. And I was expecting that to happen on that last move. And when it topped out and rolled over before that, I really started to wonder how many times are we going to be able to, come back and try to break through 3,000 and fail to do it without entering, some sort of bear market. So if we take out 3,000, I'm with you. I mean, we're going to boom to the upside. But I do think the flip side is true. Since we've consolidated for so long, if we do end up breaking down, the move to the downside could be just as ferocious as the move to the upside.
Yeah. I wasn't crazy concerned. I was a little concerned here, but I saw so many stocks, like legitimate companies, popular companies hitting 9s right here. And you can see the actually, no, not exactly. But like, even though the S&P itself on daily sequential wasn't really showing you anything interesting, but there was a setup trend line here, and around on these 2 days, there were so many stocks hitting 9 buys that I trusted the stocks a little more than the market. And I even said it on a video, one of them is going to give. Either all of these 9s are going to continue into the countdown phase, or all of these 9s from the stocks are going to reverse the market. One of them was going to be wrong. And it looks like the stocks won. And that's why I had confidence in that reversal. And yeah, just all of those stocks hitting 9s right here. All right, quick look at gold. I don't like this cluster of moving averages bunching up. It feels like, the opposite situation of, this area here. I just don't like that cluster. Trying to go back and find a similar cluster after a big run up. We don't really have it. Maybe something like this here. You had a big run up, and then the moving averages just bunched up, and then gold didn't go anywhere, and then it took a big leg down. I just don't like this monster consolidation. Though if you look at, I was gonna say the purple crossing the blue is pretty clean, but not always. I just don't like it. I would stay away from gold right now. It's clearly making lower lows and lower highs.
Yep, I agree. And I exited my position that was opened at around 1350 or so, up there around 1525 is, I think, what my average exit was. And I was expecting a significant correction to follow back down to basically I was looking below 1420 to 1400 makes a lot of sense for this thing to at least pull back and test. And I agree with the moving averages. It looks like they're rolling over after a big move. Also looks like pretty much a head and shoulders with a head in the middle, and then that right shoulder got up, you know, a little bit higher than I would like, but I would still consider that a head and shoulders. Then when we broke down on that red 2 below the red 1, I was thinking, okay, this is the time where we should, you know, watch out for a, you know, 9 count to the downside is definitely what I would expected, breaking down that pattern, and then also having the TD sequential flash and entry. So these last 3 days, you know, just has made me pay close attention, and it looks like a top, maybe a channel is developing with the lower lows and lower highs. And right now, we may be kind of testing the top of a bear channel. So will be interesting to see what happens next week.
Yeah, guys, so keep in mind, gold has been benefiting in the last, well, if we look here, this is the summer of 2018, and gold has, you know, went up quite a bit from here to there. Gold is up a good 30%, a little over 30. And this has taken place since the summer of 2018. And if we go to the S&P 500 and we go to the summer of 2018, you know, if you go to the summer of 2018,
yeah,
where are we here? Right. So that's when the S&P 500 kind of tops, September. So here's August, right? So this area here. So the S&P 500 has done absolutely nothing in that stretch, but it did fall quite a bit. And gold does tend to be inversely correlated, or negatively correlated, correlated to the stock market. So when the stock market goes down, gold tends to go up, but it has to go down in an orderly fashion. It can't be a depression, it can't be a recession, because that destroys the value of gold, because people sell, when people lose jobs, they sell gold if they have it. So gold has been a big beneficiary of the stock market not going anywhere. But if the stock market takes off from 3,000 to 4,000, that's going to probably be very, very bad for gold. And gold can still make new sub $1,000 lows. So you really gotta understand, why is gold going up? And that's because people have been concerned over the stock market, and they're still remain concerned. But I'm not saying it has to do it, but if the stock market goes above 3,000, say in February or March, let's say we get stuck here for another 3 to 4 months, and then going into the next US election, the stock market starts to rise slowly at first and quickly later with Trump's reelection. That could significantly drop your gold price back to where it was, because it's basically been the beneficiary of concerns of economics and the stock market.
Yeah, absolutely. Great points indeed, and fully agree that if the market does, you know, have a sharp move to the downside, then absolutely expect gold to as well. And that is, you know, that is a good time to be paying close attention, because once things cool down, that sell-off in gold will generally be a tremendous buying opportunity, specifically if they respond by just continuing to print money. Once that sharp move kind of starts to get some consolidation, or there starts to be some relief, at that point, gold would be positioned to really enter a massive bubble to the upside.
Right. Now, here's another nice piece of irony. Bitcoin had an amazing bull run from early 2016 up until the very end of 2017. And take a look at the stock market. January 2016, up into the high in January of 2018. So that was a 55% rise in the stock market. And Bitcoin did very, very well. What has the stock market done since January of 2018? Pretty much squat, right? It hasn't done anything. It's up maybe 1% since this day. because you can see 28.84, and if it wasn't for Friday's candle, we'd probably be right there at 29, right? So we're basically 1 day of gains since then. So and Bitcoin has also struggled along with concerns in the economy, and that makes logical sense, because now that everyone is worried about a recession and losing your job, the last thing you want to do is speculate on some crazy cryptocurrency. So if you're a Bitcoin bull, you want the stock market to break out. You want people to get raises. You want people confident in the global economy, because that increases their appetite for risk, and that increases the probability that they're going to put some of that paycheck into Bitcoin.
Absolutely. Couldn't agree more. Risk on environment is the best environment for Bitcoin. And I would be very worried about what could happen. We both agree that gold is a sell if the market tanks. And if that is the same thing holds true for Bitcoin, which I have no reason to believe that it wouldn't. That is definitely the one thing that worries me, is we have never had Bitcoin in an S&P bear market, and it being the most speculative, basically any asset class around, it is something I would expect to be affected the most by a S&P bear market.
All right, we got one more comment. Tone, does Tone not realize Trump will be impeached? If Trump actually gets impeached, not like the threat of impeached, but if Trump actually gets impeached and is removed from office, the stock market would tank so bad. Like, I can see a 50% correction in the S&P. I can see companies going under. I can see 20% of Americans losing their jobs overnight. That's what will happen if Trump actually gets impeached. And the Democrats that impeach Trump, I think their lives might actually be in danger, because they will be responsible for the biggest crash since the Great Depression, like bigger than the 08 financial crisis. Trump is not getting impeached. That's my way of saying it.
I would absolutely agree that the powers that be are going to not allow that to happen. So that's definitely, I would agree with you there. And something that just popped out at me, I would be curious to get your opinion. Does this it's starting to look like a bit of a rising wedge, just with that bottom trend line that you have drawn? If we were to,
I don't care for wedges.
Okay.
I ignore them. I don't pay attention to them. They're too subjective. I don't mind having one slanted trend line that can be adjusted with every candle, but I don't like two slanted trend lines that can be adjusted with every candle. This is also why whenever I make channels, and I've seen you make channels on this video a couple of times, this is also why when I make a channel, I always go for the parallel version. I always want to make sure that if I'm drawing a channel, actually it needs to be the other way. If I'm drawing a channel, I want it to be parallel. I want, I don't want I don't want two lines in a channel, both of which could be randomly adjusted. So if I can't draw a parallel, like a straight up parallel channel, I try not to draw it at all. And a wedge has two lines of subjectiveness, and I just don't like the variability.
Interesting. I appreciate your input, and I fully agree. As it relates to symmetrical triangles, I hate those, and I disregard them basically every time. But I actually really like rising and falling wedges, and I am of the opinion that they can actually be traded in both directions. If you have a rising wedge that breaks to the upside, big moves tend to follow, and then wedges, I also notice that when they break the way they should, a rising wedge to the downside or a falling wedge to the upside can be a really good way to identify reversals. So I like wedges myself, but definitely can understand why you would have a problem with them.
All right, I think it's time for us to call this a night. Hey guys, don't forget, we still have just very few rooms left. for Bali. If you're interested, Sawcruhteez, myself, will be there, of course, along with Ugly, Van Zen, Willy Woo, Leah, and Joe Saz is coming. It's going to be great. Lots of other people that are not on this list, but it's going to be awesome. Hey, check out my calendar. I am currently in Prague. I'll be here through the weekend, and then I am off to Romania. Then I'll be in London, and then we have that Bali event, and then I'll be over in Singapore. Sawcruhteez, thanks for joining me on the stream. You can follow Sawcruhteez on Telegram as Sawcruhteez. The links are in the video description. You can also check out his YouTube channel. And guys, hey, thank you for sending in some resumes. I am looking for a web developer for tonebase.com. This was the job ad we put up on over on Twitter. I got about 5 very good resumes. I will be reaching out to you guys, and we'll try and set up some phone calls and go from there. So thank you for that. All right, I'm gonna end screen share, and man, longer episode than expected, but we got into some good stuff.
Absolutely. We usually have a lot to talk about, and I don't mind going a little bit long. It is now the bottom of the 7th of the Cardinals game. We're down 1-0. Got a real good game brewing here. So let's go Cards. Let's take them down 2-0 and then take the series back to St. Louis.
All right, good luck. Enjoy watching. Man, like I don't get to watch football anymore, but yeah, I gotta try to catch a game or two. There's been some good football games already this year. All right, guys. Thank you so much for watching. I might do one tomorrow morning only because the Airbnb that I'm in here in Prague has an amazing view of Prague. So if it's not too cold or rainy in the morning, I'll try and do one from the rooftop here in Prague. All right, guys. Later.
All right.